The U.S. dollar is mixed to kickstart the U.S. session on August 1st. August 1st means that the new rates will go into effect. Canada will pay 35% above the 25% previously enacted against their imports, and other countries will also be paying various rates, but negotiations can continue. Of course, today is also the U.S. jobs report day. We have the U.S. employment data coming out at 8:30 a.m. with expectations of about 110,000 jobs. We saw that rise by 147,000 last month, but 73,000 were state and local workers, which will not be repeated. So it'll be an interesting report. Also, the unemployment rate is expected to tick up to 4.2% from 4.1%. In this video, I'll take a look at the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar from a technical perspective. So let's get started. We're seeing the euro versus U.S. dollar trade up and down in trading here today. This is the 4-hour chart, and what we know on the downside here is that the 100-day moving average is being banged against. That level comes in at 1.1400, a nice round number, 1.14. If it breaks below that level with any momentum, we should see further downside momentum. It opens the door for a shift from more bullish overall to a little bit more bearish, with the potential for this market to move back down toward the 38.2% retracement of the trading range for 2025. That 38.2 comes in at around the 112 level, so another 200 pips to the downside could be seen with increased momentum below the 100-day moving average if it stays below the level. So keep this. This is going to be the key barometer for traders today. As long if the price remains above it, it's more bullish, and we look toward this swing area right through here near the 114.45 level is the next level to get to and through. That level is defined by different swing levels going back to around this day. So here you can see highs, and then lows and lows right here before moving to the upside. So we came down, broke through it, and then used that level sort of as a resistance level in trading yesterday. Get above the 114.45 level and opens the door for further upside momentum as the market says, phew, we didn't get below the 100-day moving average this time, so the buyers remain in play and more in control from that perspective. 100-day moving average, 114.45 level, those are the two key levels in trading today going into the U.S. jobs report. Let's take a look at the dollar versus yen index, and again we'll look at the 4-hour chart. This currency pair moved sharply to the upside in trading yesterday. In the process, we broke above the 200-day moving average. That was a catalyst for increased momentum. We first came up to that level, found resistance. Sellers came back down to this swing area right through here, and then broke through it this next time, and that was Katie bar the door to the upside. We saw momentum increase out to the upside all the way into the close. Today we're seeing a little corrective move to the downside. The price has moved back below, this old high right here. That was a target level on the top side, which we broke through it earlier today. But the market is now has since rotated back to the downside. And currently trades just below that level. It's at 150.48. Current price trade at 150.46. So we're right around that swing level. On the top side, we have this other level, this area up here, which will be the next key target. 151.19 to 151.33 is where that these swing lows and break through it, and then swing highs through here and here come into play. Get above that, and we'll look toward the 61.8% retracement. So, taking a breather here, but the 150.48 level would be the key barometer. If we move below that level, we could see the price move back down toward a retest of that 200-day moving average. But if we go below that 200-day moving average, go below the 50% retracement, that would not be good for this view from a technical perspective. So this area right through here is really, really, really key support going today and going forward. So be aware of that. On the top side, we've got the swing level on the 61.8% retracement. Finally, let's take a look at the sterling versus U.S. dollar. And what sticks out right away off of this chart is that the range for 2025, the 38.2% retracement, is being tested. Not only is it 38.2% retracement, it also corresponds with this low right here, which is a coincidence, but still a nice level of support that traders will look at, not to mention it was a high price right here before breaking to the upside here and moving higher. So that that level is this level right here is 131.426 is a key level going to the data. Current price traded at 58. So the market's giving itself 16 pips of breathing room, some space before the U.S. jobs report. If the dollar goes higher after the report, then we should see a break of that 38.2% retracement. If we do, we should see further momentum to the downside for this pair, with the market probably looking, over time for a retest of the 200-day moving average. Recall earlier this week, the price fell below the 100-day moving average. That helped to ignite selling to the downside for this sterling versus U.S. dollar. So there you have it. A look at the three major currency pairs as we head into that key U.S. jobs report. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.